export products of Brazil include iron ore and also the crude petroleum. Okay. Iron ore, I don't know if you've known about this. This is a very special product. What does it make for? If you purchase iron ore, what do you want to do? It's a special product, particularly to make a steel. If you want to make the steel, you need these ingredients anyway. Okay. So, yes, the top exports of Brazil are iron ore and crude petroleum, okay, because obviously it has abundant natural resources of that, in particular the mining industries. Okay. And it's interesting to know that the top export destinations of Brazil is essentially China, followed by the United States. The results are not surprising because Chinese government in recent years has made huge efforts in developing its steel industries. Okay, so it imports a lot of iron ore from Brazil to China in order to sustain its manufacturing process of steel industries. Okay. And Brazil is a very special country, which makes a crucial part in U.S.-China trade war. Okay. What was the root of U.S.-China trade war? Does anyone know? I think the beginning of the U.S.-China trade war since 2016, okay, and it was related to Brazilian economy in terms of iron ore. Okay, let me tell you why. And let's go back to the history of economic development in the global marketplace. Do you still remember about the financial crisis back in 2008? Yes, right. So you know about after financial crisis in 2008, those advanced countries such as United States and European Union, lots of Western countries, they had struggling to get back to become the world's market leader in terms of economic development with very strong GDP growth rate. Okay, and also their lack of sufficient market power to offset the competition and threats from emerging markets, typically the countries like China and Southeast Asia. And China, on the other hand, think about that. Even it was not being influenced too much by the financial crisis back then, because it was a closed market back then. Okay. Chinese government, even today, still apply quite tight trade policies and stringent foreign investment regulations by national protectionism, if you've heard about that. It had also stumbled by its slow economic growth in terms of a decrease in even negative GDP growth rate since 2008. Okay. So different reasons behind China and other countries, the rest of the country around the world. Most countries, if they are free market, they're actually so influenced by financial crisis, so economic stumble back then. But China is a special case. China did not participate in the free trade market, but it still got quite influenced by the financial crisis in a sense. Okay. Speaking of the GDP growth, okay, do you know what is GDP? What is GDP? GDP means gross domestic product, right? It measures the value of the final products and services produced in a country over a specific period of time. Usually it can be calculated quarterly or yearly basis, right? If I put it in a formula, do you still remember how to calculate GDP? Yeah. You just pause the text so you know about it, right? Okay, what is C? Consumption, consumer spending, right? What is I? Business investment, right? What is G? Oh, you're very good. What about X minus N? Means that, yeah, total export minus total imports. That means the net exports, right? So country's GDP is a total of the consumer spending plus the business investments plus government spending and also the net imports. So the first three elements, as you can see, they are concerned with the investments in the domestic markets, right? But the last one is obviously relating to international trade, okay? And from the formula here, you might know that to boost a country's GDP growth rate, you need to encourage more household spending. You need to increase the business investments, expand your government budgets, or make more international trade surplus from other countries, right? These are the 4 ways you can do this, just simply from the calculations. But apparently, at the time of financial crisis, think about the households, the consumers. They were lacking of disposable income. They don't want to spend, right? And businesses hardly survive for the further investments, okay? And international trade was halted for the obvious reason. I don't want to explain why, because it's financial crisis and everyone don't want to trade with each other, okay? The only way out was the government spending, the government itself. So that's why many countries around the world, including China, United States government, started to increase their budgets to build the infrastructure in order to increase their expenditures on government projects, such as the public roads, railways, stadiums, hospitals, etc. Anything that related to infrastructure developments that will require an important elements. There was steel. Okay, we want to build a building, you need steel. So to produce a quality steel, you must have iron ore imported from Brazil. Okay. So that was the beginning of the US-China trade war, since both countries need the iron ore very much. And both had a problems of overcapacity of steel production a few years later. And to solve the issue that to keep out the steel price in their domestic markets, they started to set up very ridiculous high trade tariffs on steel imports from each other since 2016. So while the beginning of the trade war was in steel industry, as you know, now the trade war has been extended to other industry as well, with the main focus on the tech industries between 2 giants. Okay. So just give you a background story why Brazil came in on the list as a result of US-China trade war. Okay. And the next figure, give you the most updated data from the World Bank. Okay, so this is the most updated data in the year of 2021. Okay. So what has been changed since 2015 from the previous figure? You can see the top 3 leading countries are still the same, right, as they were in 2015. But the new market, Hong Kong, has stood up even in the midst of pandemic. When we see the data last year, to take into account pandemic, okay? So why do you think Hong Kong can make in the list? What do you know about Hong Kong? Anything about Hong Kong? Have you been to Hong Kong? Yes. What do you think about their economics over there? What's the main economic driver of Hong Kong? Finance, right? Insurance industries in general, right? So you know that although Hong Kong has belonged to China since 1997, right? But you know that unlike China, Hong Kong is highly developed free market economy. Okay, it is characterized by low taxation, especially the income taxation rate over there is just 17%, much lower than Taiwanese rates. Okay, so that's why there are many people who like to work in Hong Kong. You have higher pay, you got lower tax. Okay, very excited to do that. I myself worked in Hong Kong for a few years, so I know about it. And almost free port trade and a well-established international financial markets. Okay, while most countries will suffer from travel restriction between the East and the West during the pandemic, Hong Kong, as the world's leading country with the most density of multinational enterprises, especially headquarters over there, they has therefore become a turnaround for many of the international business because they headquarter there. They don't need to move. Okay, they can do business with each other very easily in the same country. So that's Hong Kong, that's why they came in on the list. And the next figure is about, now we compare the annual value of the merchandise trade in total as the percentage of each country's GDP. Okay. So if the percentage of total exports and imports in a country exceeds this GDP, it basically means that these countries that are highly dependent on international trade to support their economic growth. So the top 3 countries are the perfect example. So you can see that remarkable statistics spanning around in the figure that the merchandise trade is much larger compound economic activities in a country such as Belgium and the Netherlands, roughly about 120% each, and also South Korea, about 80%. So meaning that these countries depend very heavily on international trade by exporting and importing of their products relative to the value of all goods they produce domestically. Okay. And if there is any problems occur in the global economy, such as financial crisis again, then their economies will be seriously affected. Okay. And one of the possible factors could be the fluctuations in currency exchange rates, inflation rates, in the case that this leading international merchandise trader may not be able to hold their position as they used to be. Because we know that we can't just use single currency to do the trade. Okay? Of course, we know the United States is a strong currency, but other than that, we still need to do the exchange with the currency exchange anyway. Okay? But what can you see from the figure? Compared with the figure, you see the leading country, including China and United States, now they are quite behind the charts, right? So you see that while China and the United States are the leading countries in terms of the absolute value of the total product trade, as you've been seeing the previous figure, their trade values only account for roughly about 40% and 20% of their GDP respectively. So this statistic result showed that China and the United States, given being the leading exporters and importers in the merchandise trade, their economic developments do not necessarily rely on international trade, but rather depend heavily on their domestic consumption. Does it make sense? It means that, for instance, taking examples of China, right? Over here is that the total exports and imports value as a percentage of the GDP, just about 40%. It means the rest of 60% coming from the three elements here: consumer spending, their business investment domestically, and also their government expenditure. Okay. So let's move on to the next chart. Again, the most updated data collected from the World Bank. You can see Hong Kong ranked the top again, right? In the annual value of merchandise trade as a percentage of their each country's GDP. I think this is not surprising at all, as you know that Hong Kong is highly dependent on international trade, especially in finance, right? And Hong Kong economic strengths include a very sound banking system and virtually no public debt, and a very strong legal system, and ample foreign exchanges reserve. And also they have very vigorous anti-corruption measures and close tie with the mainland China. So that's why usually Hong Kong will be perceived as a gateway to China by many of Western multinationals. Okay. They're so eager to enter Chinese market, but they can't do it right now. So they started their first stop in Hong Kong in order to get access of the Chinese markets. So what we talk about so far is about the statistics of product trade in the world. What about the service trade? Okay. So services are these performance or efforts performed directly by people working in the service industry, obviously, such as banks, consulting firms, hotels, construction companies, retailers. They also belong to services industries. And also countless other firms in the service sector. Okay. For example, give you an example, actually you are doing international trade. Probably your parents are doing international trade quite a lot. So if you own a house, okay, your mortgage may be underwritten by Citibank, which is American bank. Okay? And in the United States and several European countries, travel and tourism are now the #1 source of service revenue from their foreigners. Okay? And in fact, international trade and service accounts for about 1/4 of all international trade, and it's growing rapidly. But compared with the volume, total volume of the product trade, service trade is still a small percentage. Okay? That's because not all services can be exported or imported. We're going to talk about it later. Okay. Now, following the same logic here, you see in the previous figure, this figure identifies the leading countries in total international service trade, including those exports and imports. Okay, what do you see from it? I mean, the top 3 countries are still the same. They are the largest, the world economy at all times. And can you see Singapore and Hong Kong? Right? Where were they on the list? Let's talk about Hong Kong. You know that it's a financial hub, right? What about Singapore? I think it's the same situation for Singapore, right? Singapore is also another financial hub, right? So these 2 countries are rather small, but they are really a good destination for Western companies, especially to international service trade. Okay. And think about what is interesting, I think the figure is that India, okay, as one of the BRIC countries, first 30% as the top service trader on the list. Okay, do you know why India can make on the list? Yes.
IT?
Yeah, IT services, right? What else? Why do you think the IT services are particularly strong?
时差.
Yeah, time difference, right?
Oh, yeah, time difference.
Well, why do you say time difference?
Because they are when they are sleeping, Americans are awake. When they are awake, Americans are sleeping.
Yeah, the time difference could be one of the benefits for India, right? If many people would say that they believe India can be a country, especially being outsourced by most of the Western companies because they have a low cost advantage in terms of labor. Okay, but think about that. What about China? China has much lower cost in terms of labor, right? Think about the other countries in Southeastern region, still got a low cost advantage in terms of labor. Why India can stand out? Okay, yes.
Because they speak English very well.
Yes, because they have official language of English, right? So it has been the main global sourcing destination, especially in the IT service industries for many Western countries such as United States, European Union. And also it speaks English, right? And highly educated people specialize in the high-tech information and communication technology sectors. Okay? And they can provide compatible services for the Western companies. Okay? And in the case of American multinational, think about that, like something I just talked about. Indian employees they can offer their customer with 24-hour around-the-clock service because this is roughly about 12-hour time difference between the United States and India. Okay. So when American employees they are off work, the Indian employees are just about to work. It's something related to what you just said. And this around-the-clock service greatly enhances the customer satisfaction around the clock. Have you ever called in an international service line to an American company before? So who picked your phone up? Someone speaks English, obviously, right? But can you understand their English? I myself is a personal example. So a few years ago, I bought an Apple laptop, okay, MacBook. I had some problems. At the time, there was no local service repair in Taiwan. So I called the international hotline, and someone picked up my phone. It's Indian. Okay, so it's something echoing what they just did. There are many customer services that being outsourced in India because they speak English, although I don't understand their English at all. Okay, no offense. Okay, but there's not much differences between the data of 2015 and that of 2021. So if you're interested, you can look for the data from the World Bank by yourself. Okay, so let's take a break for 10 minutes. Okay, and we'll come back to continue the lecture.
我今天那个晚上会稍微晚一点，今天晚上不过医生说吧，因为我看他就是那个产经，我们这组走路就跑步，他晚上忘记了开会。我没跟你们讨论太久，但是我可能会晚一
我们开会之前，我们要先准备3号吧？要吧？我们是礼拜六晚上。然后你们他准备打电话。
要先看一个公约吗？
可以啊，我们是要做一些。做一些。哎，看过了。好，这样。